Contrary to what Hollywood would have you believe, trading stocks isn't a matter of putting on your favorite power suit, picking up a phone, and screaming, "Sell, sell, sell!" Instead of trying to buy and sell hot stocks in the hopes of striking it rich, I suggest you reframe. Investing is a long-term strategy to help ensure your financial future. Today, we will tell you everything you need to know about trading stocks. Number 7. What is stock trading? Trading stock is a bit of a misnomer. All it really refers to is the buying and selling of stock for money. So whenever you buy or sell your equity, that's considered trading. And there are two ways you can trade stocks. Exchange floor trading. This is the kind of trading you see on movies and television with all the people shouting on the floor of the New York Stock Exchange. It's a bit of a complex process, but at its core, here's how it works. You tell your broker to purchase stock from a company. The broker sends a clerk to the floor to find a trader willing to sell you the shares. They agree on a price, and you get the shares. You can also set what's called a limit order, meaning a limit on the price you're willing to purchase the stock at. The seller can also set a limit order. Electronic trading. This is a much more intuitive process for individual investors. It most often comes in the way of online brokerage platforms or trading tools that allow you to immediately issue a trade during trading hours. No more relying on screaming floor traders to pick up the shares for you. Stock trading entails buying and holding stocks for a short period of time in order to turn a quick and significant profit. Traders aim to take advantage of the short-term pricing fluctuations in the market. Trading can be contrasted with investing, the approach to the stock market that aims to gradually build wealth by holding assets over a long period of time. Whereas investors buy stocks and hold them for many years, traders hold them for only an hour, a day, a week, or a few months. There are two main types of stock trading: active and passive trading. Active trading is a highly technical approach with the goal of capitalizing on short-term price fluctuations. Active traders are generally divided into two camps based on the time period in which they hold their securities. Day traders. Day trading refers to any strategy that involves buying and selling stock over a single day, such as seconds, minutes, or hours. Swing traders. Swing trading involves buying securities and holding them for days or weeks. Passive trading focuses more on stocks' long-term trends rather than short-term fluctuations or market news. Position trading is a type of passive trading. Passive traders buy based on overall market trends and sell when they believe the security hits its peak, which can take months. They generally trade less than active traders. In this way, passive traders are more akin to long-term investors who follow a buy and hold strategy. Number 6. Where to learn the jargon. Stocks come with their own language. There are things like limit orders that dictate buying at a certain price or trading on margin, which is essentially borrowing money to purchase stocks. Jeff Reeves, Executive Director of Investor Place, a resource for individual investors, says people shouldn't worry too much about the terms when they're starting out. Number 5. Here are the basics you need to know to start investing. Rather than try complicated transactions, new investors are best served by simply buying securities at market price. As people get comfortable with the basics, they can then branch out into more advanced trading scenarios. In a bygone era, there would be an investing club or group getting together for breakfast at Denny's. These would allow new investors to learn from more experienced ones. Today, people may have to look elsewhere, such as in Facebook groups, to get that type of mentoring and education. Other resources, such as Online Trading Academy and the mobile app Investor, let people participate in simulated stock trading so they can experience the process firsthand without putting any money on the line. The stock market ended 2016 with a series of record-high days, and the Dow Jones Industrial Average has continued to inch toward a milestone level of 20,000. Soaring stock prices may have some people wishing they could get in on the action, but the process of buying, selling, and trading stocks can be intimidating. Fortunately, it doesn't have to be that complicated. The average person thinks there is this secret sauce or fancy algorithm they have to learn, says Sam Seiden, Chief Education Officer for Online Trading Academy. But it's not rocket science. Number 4. How to pick the right stock. While new investors don't need to worry too much about learning stock terms, experts do recommend they put in plenty of time researching which stock to buy. Annual reports and price-earnings ratios are helpful, but Reeves says his best piece of advice is for people to buy what they know. "Say I'm a doctor," he says. "It might make sense to invest in medical device companies because that's what I understand." Although people might be eager to own a piece of Apple, ticker AAPL, or Microsoft Corporation, MSFT, new investors should remember they don't have to buy individual stocks if they want money in the market. "I'm a big believer in index funds," says Adam Bergman, a senior tax partner with IRA Financial Group. "They do a really good job for the novice investor." Typically sold as mutual funds or exchange-traded funds, these combine a number of stocks in one fund that is designed to mimic the returns of the Standard & Poor's 500 index, Russell 2000, or another stock market index. Each index tracks a section of the stock market. For example, the Nasdaq Composite tracks technology firms, while the Russell 2000 includes smaller businesses. Number 3. Buying at the best time. Once you know what to buy, don't run out and make a purchase immediately. There's a reason Wall Street makes money consistently and the average investor doesn't. According to Bergman, that's because Wall Street investors wait until the share price drops before making a purchase, while many new investors buy when the prices are highest. Here's the trap for a new person. They will focus on stocks where the news is good, but by the time they get the news, everyone else, in the know, has already bought it. This cycle means new investors are often buying when prices are the highest. A better route is to watch a stock price and buy when it's down. A tactic encourages as a way to buy shares at a sale price. Number 2. The difference between investing and trading. Well, as for when to sell, it depends on whether a person wants to invest or trade. Investing in stocks means buying and holding shares for an extended period, while trading refers to buying and then quickly selling for a profit. While day trading can sometimes result in a fast windfall, Reeves doesn't advise it. For a beginning investor, you shouldn't be thinking about buying in terms of days or hours, he says. The longer you hold, the more successful you are. Bergman notes many people get confused about taxes as they apply to trading and investing in stocks. If shares are held at least a year before a sale, the profit is subject to capital gains tax, which is currently 20%. Gains from stocks that are sold in less than a year are taxed at the same rate as a person's other income. Number 1. The best place to buy. The final piece of the puzzle for new investors is where to purchase stock. For ease, Bergman recommends starting where you already have an established business relationship. Start with your bank, he says. Most banks have a brokerage firm, and they will set you up very quickly. Having a broker buy and sell stocks on your behalf may be easy, but it's not the cheapest way to go. A share of Amazon, AMZN, is a share of Amazon wherever you buy it, Reeves says. He recommends going with the brokerage with the fewest fees. Buying, selling, and trading stocks can seem confusing at first, but it doesn't have to be overwhelming. Some research and a few simple transactions is all it takes to have a portfolio of shares that could make you money off the rising market. Do let us know in the comments. What do you know about stock trading? Thanks for watching.